Hey everyone, welcome back to the channel. You know, everyone wants to be a real estate mogul, right? Driving around in your Lambo, checking on your properties. But when you look at the price of real estate these days, it feels impossible to even buy a single unit. Trust me, I get it. But the truth is, you don't need to win the lottery or inherit a fortune to get started in real estate. Today, I'm going to show you 5 proven strategies to break into the real estate market without breaking the bank. Let's dive in. The easiest way to dip your toes into the real estate investing pool is through REITs, which stands for Real Estate Investment Trusts. Now, I know what you're thinking, REITs sounds boring, but seriously, stick with me here. REITs are like the gateway drug of real estate investing. They're publicly traded companies that own, operate, or finance income-generating properties. Think massive apartment complexes, sprawling shopping malls, or even those giant Amazon warehouses you see popping up everywhere. By investing in REITs, you're essentially buying a tiny piece of these massive real estate projects. It's like owning a sliver of a skyscraper in New York City, but without the hassle of being a landlord. The best part? REITs typically pay out a big chunk of their profits as dividends. That means you get a nice, steady stream of passive income just for holding on to them. You can easily buy REITs through any brokerage account, just like you would buy stocks. And because they're publicly traded, you can buy and sell them whenever you want. No need to deal with fussy tenants or leaky faucets. Let's face it, rent is crazy expensive these days. But what if I told you there was a way to live rent-free, or even make money off your living situation? Sounds too good to be true? Well, welcome to the world of house hacking. House hacking is like the ultimate life hack for real estate investors. It's all about buying a property, living in one part of it, and renting out the other parts to cover your mortgage and potentially even put some cash in your pocket. Think about it. You're essentially getting other people to pay for your housing, while you build equity in a valuable asset. It's like killing 2 financial birds with one stone. There are different ways to house hack, depending on your budget and risk tolerance. You could buy a duplex, live in one unit and rent out the other. Or, if you're feeling ambitious, you could buy a larger multi-family property and rent out multiple units. Now, house hacking does require some upfront capital for a down payment and closing costs. But hey, it still beats throwing your hard-earned money away on rent every month, right? Plus, you get to be your own landlord, which means you call the shots. Alright, let's talk about real estate crowdfunding, the cool kid on the block that's making real estate investing accessible to everyone. In the past, if you wanted to invest in large-scale real estate projects, you needed deep pockets and connections. But with crowdfunding platforms, you can pool your money with other investors to fund everything from luxury condos to sprawling commercial properties. Think of it like Kickstarter, but for real estate. You browse through different projects, choose the ones that tickle your fancy, and invest as little or as much as you like. These platforms handle all the nitty-gritty details, from property management to tenant screening, so you can sit back, relax, and watch your money potentially grow. Crowdfunding platforms offer 2 main types of investments: debt and equity. Debt investments are like loans to real estate developers, and you earn interest payments. Equity investments, on the other hand, give you actual ownership in the property, so you share in the potential appreciation and rental income. It's like having your own mini real estate empire without the headaches of being a landlord. Now, for those of you who love a good hustle and don't mind putting in a little elbow grease, wholesaling is your new best friend. This strategy is all about finding hidden gems in the real estate market, those undervalued properties that everyone else seems to be overlooking. Think of yourself as a real estate treasure hunter. You scour the market for properties that are priced below market value, often because they need a little TLC. Once you find a promising property, you put it under contract with the seller. But here's the catch. You're not actually buying the property yourself. Instead, you're going to find another buyer, usually a seasoned real estate investor, who's willing to pay a premium for the opportunity to snag that undervalued property. You then assign your contract to the new buyer for a fee, pocketing the difference between your contract price and the price the new buyer is willing to pay. It's like flipping a house, but instead of flipping the actual property, you're flipping the contract. Alright, let's talk about creative financing, because let's be real, not everyone has a pile of cash sitting around for a 20% down payment on a property. But that doesn't mean you have to kiss your real estate dreams goodbye. Creative financing is all about thinking outside the traditional mortgage box and finding alternative ways to finance your real estate investments. One popular option is seller financing. This is where the seller of the property actually acts as the bank, giving you a loan themselves. It's a win-win situation. You get to buy the property without going through the hassle of a traditional mortgage. And the seller often gets a higher interest rate than they would from a bank. Another option is a lease option, also known as rent-to-own. You lease the property from the owner with the option to buy it later at a predetermined price. This can be a great way to get your foot in the door and test out homeownership before fully committing. And finally, there's the power of partnerships. Team up with a friend, family member, or even another investor to pool your resources and buy a property together. You can split the down payment, mortgage payments, and any other expenses. Just make sure you have a solid partnership agreement in place to avoid any future drama. To recap, here are 5 ways to start investing in real estate with little money. 1. Invest in REITs for low-cost exposure to real estate. 2. Use house hacking to reduce your housing costs while building equity. 3. Explore crowdfunding platforms for passive real estate investing. 4. Try wholesaling to earn profits without owning property. 5. Use creative financing strategies to acquire property with minimal cash. By starting small and leveraging these strategies, you can begin your real estate investing journey and work toward building long-term wealth. Remember, you don't need to be a millionaire to get started in real estate. Thanks for watching. If you found this video helpful, give it a thumbs up and subscribe for more investing tips. Have you tried any of these real estate strategies? Let me know in the comments. I'd love to hear your experiences. Until next time, happy investing.